Hello and welcome back to the Start the Glamping Business podcast. Today we have Connor Schwab back as a co-host, our new monthly co-host, and we are joined by Nick Parker, who is a loan officer on the RV Park and Campground lending team at Live Oak Bank. Live Oak are a small business bank that's heavily involved in the outdoor hospitality industry, and today we're going to be talking all things glamping site financing. So anyone who wants to get financing or funding for their glamping project, this is certainly the episode for you, and I'm sure there's some nuggets in there for people who are going to be self-funded anyway. Connor, just before we kick off, I know you've got a few words you want to say about Nick as well.
Yeah, us at Sage Outdoor Advisory, we partner very closely with Live Oak and Nick and his team, and they're phenomenal to work with. And probably as we'll dive into, there's not a lot of private investment and private institutional capital coming into the glamping space to fund projects, especially entrepreneurs' first-time projects. And so, debt financing is one of the best routes for entrepreneurs to get a project off the ground, and particularly SBA. And I think that Nick and his team are the best in the industry at putting those deals together, and they have a whole division specifically centered around outdoor hospitality. And they, it's a tough industry to get capitalized sometimes, and I think Nick and his team are probably capitalizing more outdoor hospitality projects than anyone in the country. And the feedback that we get from our clients who work with them is nothing but phenomenal. And so it's always good for us to be working with them. And if there's any entrepreneurs out there who have gone to their bank and had, skeptical lenders who just don't understand the principles of glamping, that's very common. Probably 95% of bankers out there just don't understand this asset class because it's so new and unique and diverse, and it's never come across their desk. But Nick's whole team specializes in this, so they know the fundamentals. He's probably done dozens and dozens of site visits, so he's got a lot of knowledge surrounding the space. I'm excited to hear more about what he has to say, because he's probably one of the more pivotal people in the industry.
Amazing. Connor, again, doing a far better intro than I could. We'll just have to give you the full-time gig now. Nick, welcome to the show. Really happy to have you. Tell us a little bit about yourself, your backstory, and how you got into this business.
Yeah, so I'm kind of an accidental banker, right? I went into business school, thought maybe I'd go into sales, and so we're in Wilmington, North Carolina. That's where the bank is today. And I needed an internship, so I asked around and knocked on a couple doors and was pointed towards Live Oak Bank back in 2014. And after about a week of being an intern here, I knew there was something different, something special about the culture, about the way people talked about each other, to each other, cared for each other, and cared about their business. So I've been here my whole career at Live Oak Bank. I started in 2015 when I graduated from undergrad. I spent my first couple years as a closer, so kind of on the back end of the process, working through the final steps to get the money out the door. Tough first job, but a good first job. I learned a lot. I probably got beat up a little bit, in that learning process. But I think if you can understand the end of the funnel, it makes you a lot more effective on the front end, right? That's hopefully the goal. So after spending some time as a closer, I went into the underwriting role, spent 3-4 years there working through the numbers, putting deals together, working with our credit team, kind of seeing how the sausage is made to actually get the deal approved. But always knew I liked connecting with people, I liked meeting customers, I liked being on site, so I always kind of knew the sales role was probably the direction I wanted to end up in. So I was a loan officer on our investment advisory team for 2-3 years, learned a lot there, but wanted to find a space where I was personally a little bit more passionate in, somewhere where I would want to invest my money, my time, my energy. So we started the RV park lending team, RV park and campsite lending team about 3 years ago. Close personal friend of mine in Wilmington, just by happenstance, his family owns the 2 KOAs that operate in Wilmington. And just by having family dinners with them and spending time together, I was just fascinated by the business. It was profitable. It was a quality group of people, right? It was a business you could expand. So when Live Oak started exploring this space, it kind of felt like a natural fit for me. I was interested in real estate. I wanted to do construction. So yeah, I joined the team about 1.5 years ago. And it's just been kind of full speed ever since, right? So really, to take a step back more about Live Oak and kind of how we operate, we really are we're kind of playing to be America's small business bank is what we say, and we really mean that. But we do it a little bit differently than a lot of traditional banks who would say, we're a $10 billion bank. We're in Wilmington, North Carolina, so the size of a regional bank. And a lot of banks would say, okay, well, let's get everything in a 100-mile radius, right? Let's get everything in North Carolina. Maybe let's even get everything in the Southeast, but it doesn't matter if it's a pawn shop, a grocery store, a gas station. We'll take a look at it. We think we can do it differently, and we think we can do it better. So as opposed to operating in a geographic fashion, let's operate in specific industries that we want to be in, that we think are underserved and we can become experts in. So, right, whether I'm looking at a deal in Texas or Maine or Florida, sure, there's differences, of course, but there are a lot of common themes, right, in terms of the risks, in terms of the opportunity, in terms of the vision, qualifying the individual. So Live Oak lends in about 35 industries today across the country. I'm 100% all day long RV park, campsite financing. So the idea is you can pretty quickly assess an opportunity, make good decisions, set your borrower up to be successful, and really go into a relationship where we're kind of in it for the long haul, working together, rowing the same way, because that's really from, again, the top of the funnel down. I only look at RV parks and campsites. My underwriters only look at RV parks and campsites. We have a dedicated credit team who is knowledgeable on this asset class. They go to our site visits. They meet the referral sources. They spend time with the Connors and the Nicks, right? They get to know the industry themselves all the way through our servicers, right? Their entire portfolio is RV parks. So they can look at trends. They can look at margins and say, hey, you're really doing great here. Hey, maybe your staffing's a little bit off. It seems to be working, but is that something you've thought about? Being able to really understand the business more so than if we just said, I'm going to take everything that comes in the door and know a little bit about everything. We want to know a lot about something. So that's kind of the model.
Yeah, and having been at Live Oak since 2015 and focused kind of on the outdoor hospitality industry over the last couple of years, presumably you've seen changes, trends, patterns come and go, but particularly kind of the rise of glamping and unique outdoor hospitality. So tell us a little bit about how that's changed over the last few years and the kind of things that you've noticed being so close to that industry.
Yeah, I think everyone's grown up a little bit, right? People are asking better questions. People are coming more prepared. It's you certainly, as you guys know, as we all know, right, that there's always going to be our fair share of tire kickers, but I think legitimate, qualified borrowers are getting stronger, and we're continuing to see more qualified leads, which is great, right? It shows the industry is attracting talent, attracting capital, attracting real investment, real interest. Hopefully, we're growing our reputation in the industry, right? So good folks are finding good folks, hopefully, is the idea. But yeah, I just see a lot of continued momentum. One of our lenders on our team, Mo, prior to coming to this team, he spent the last 5 years in self-storage, where that had its big boom. He likens it to self-storage 15, 20 years ago, right, where it's before some of that institutional money came in. It's before people really found out about the business, understood the business model. So it feels like a bit of a land grab right now, right? Folks trying to differentiate, folks trying to get their name out there, build a brand. But we are really encouraged by what we're seeing. I think, we continue to see more education, better business plans, more comprehensive vision. So, and the pipeline's growing.
Yeah, I think you're right. I think everything is professionalizing, and I think, certainly over the next, let's say, 5 years, as the institutions start to arrive, as I think, short-term rental investors start to arrive. I've been big on this for a good few months now about how, these people that are investing heavily in Airbnbs and short-term rentals that generate, a 10% return each year, are going to at some point latch on to how good the returns can be in unique outdoor hospitality and glamping. So, I think certainly the industry is only going one way in that sense, absolutely. So let's talk about the potential routes to financing a glamping, outdoor hospitality, whatever you want to call it, project.
Sure.
So you have someone that comes to you on day one. Maybe they've got a few $100,000 in cash. They want to do maybe a project worth a couple of million, 3 million, whatever. Tell us about the various routes towards financing a glamping project.
Yeah, so I would say we are about 50-50 in terms of the product we're using. About half of our borrowers are utilizing the SBA, and about half of our borrowers are utilizing a conventional loan product that's not government guaranteed. We feel like the SBA is a great product for a lot of folks, but it's not everything to everybody. I think one of the nice things about working with Live Oak and kind of the tools we have in our tool chest, some folks are really only SBA, some folks are only conventional. We really are comfortable and able to execute on either, to where you can come to us with a project and say, here's what matters to me, here's my budget, here's what I can put into it, here's what I'm looking to do with this thing. Help steer me in the right direction. And sometimes we put two offer sheets in front of you. Here's what it looks like to do it through the SBA. Here's what it looks like to do it conventionally, and really allow the borrower to have that autonomy to not really steer them in any one direction, but really try to educate to say, there's pros and cons with each. So try to outline what that looks like. One of the nice things about working with Live Oak, so of every bank in the country, no one lends more SBA dollars than Live Oak Bank, right? So we are the largest SBA lender in the country. It's a product we know very well, a process we know very well. I think there's certainly a lot of kind of myths and horror stories out there about the SBA, and a lot of those horror stories are real, right? Because if you work with a bank who does 5 SBA loans a year, there is a likelihood that that process is not smooth because they're just not nuanced in it. It's how we grew up. It's really what's ingrained in our process and our culture. We deal in enough volume that we don't have to send a project over to the SBA to say, hey, do we have your stamp of approval? We're what's called a preferred lender, and really what that means is they know that we are collateralizing, underwriting, structuring these deals in a way that we don't have to get that check mark every time, because that can take a month, 2 months sometimes if you're working with a bank who has to send it off to the SBA for their approval. And then on top of that, you add, hey, this is an industry, maybe that SBA approver is not seen, right? So they've got their own set of questions around that. So I think when you add in the industry expertise that we bring on top of the SBA expertise that we bring, hopefully we can provide a really good experience there and create a path for someone to get that financing.
And just so people know that the differences between the two, obviously you've got a conventional loan and SBA, small business administration loan. Could you just tell us a little bit about what those two options are and the pros and cons of each?
Sure. Yeah, so the SBA, a lot of people think that means we're lending the government's money, which is really not the case, right? So there's even some kind of misconceptions there. So it's Live Oak Bank dollars, right? We're lending out of our vault, and so this is on the SBA. But essentially what happens is the SBA is encouraged by, right, that the small business is the backbone of America, right? That's really what drives our country, drives employment. So they want entrepreneurs going out starting businesses, buying new businesses. So what that looks like is there's a 75% guarantee on that money. So if we lend you $1 million and then day one you turn around and say, you know what, I can't afford any of this, the thing's gone belly up, the government will guarantee 750 of those dollars for us. So it almost acts as a form of collateral, right? It's a far more secure loan because of that backstop. That makes us more willing to work with first-time owners, right? Work with folks who maybe have less capital to put in out of the gate. Folks who have a good business plan but have a good background but have never spent really any time in this industry, but maybe they've got some other applicable skills. So that's the SBA. You really cap out around $8-9 million. You can do a $5 million SBA loan, and then on top of that, what's called a pari passu, which is a conventional loan on top of it that would mirror the term. So that's part of the reason sometimes SBA doesn't work as projects get larger. And this honestly happens kind of more on the RV side for us at this point. As we do a $15-20 million loan, the SBA just starts to not apply anymore. But typically, the SBA sweet spot is somewhere in that $3 to $6 million, right? That's where it seems to make a lot of sense. You can typically get 90% financing on that. So, that can be advantageous, less capital in, less barrier to entry there. It's a little bit more of a long-term vision loan in terms of it's a 25-year term and a 25-year amortization. So you're kind of in it for a longer duration. But it does have its own set of nuances, right? It's less flexible than a conventional loan. We are working within the parameters that the SBA sets. So when you look at a conventional loan, the probably benefit is the flexibility, right? That you have a little bit more ability to turn the dials on the structure, on the collateral, on kind of how the financing is arranged. But because you don't have that backstop, we want a little more skin in the game out of the gate. Where we would do 90% financing through the SBA, we're probably more like 60 to 70% financing conventionally, because there is more risk for Live Oak, right? If that loan defaults, we are now on the hook for every dollar that we've lent. So there's a probably higher barrier to entry on a conventional loan would be one of the differentiators, and we probably are a little bit tighter around, okay, what's the background, what's the experience, how much additional capital do you have behind it? There's just kind of that higher bar you've got to reach to get a conventional loan, because of the implications of what it looks like in the backstop.
So, we've got the basics of what an SBA loan is versus a conventional loan. Could you talk us through both routes in terms of how they typically work? So let's say someone comes to you and says first of all they want a conventional loan, and then someone else comes to you and says they want an SBA loan. What does that process look like in terms of application, kind of what you need to show, and time period, length of time it takes to close the loan? What does each route look like in terms of that?
Yeah, I mean, I'll talk about them separately, but to be honest, because of the fact that we don't have to send it over to the SBA, they almost mirror each other, right? I mean, the application documents are going to be a little bit different. There's a couple unique documents the SBA is going to require, like Form 1919 that looks at your personal character, things like that, personal background. But really, it's almost identical from a process standpoint, so I'll just talk about that process. One of the things you guys know is, in the almost 2 years I've been in this space, I've not seen two projects that are the same, right? I mean, every one of these things is unique in terms of the market, in terms of the background, in terms of the budget, the type of accommodations they want, the vision for it. Is it going to be family friendly? Is it going to be for couples? I mean, there's just so many dials that differentiate these things. So I think we try to understand the motivation and the vision out of the gate when someone comes to us. Why are you doing this? Where do you see this going? Certainly we want to understand what type of background they've done. Have you been to a glamping unit? Have you figured out what you like, what you don't like? Have you thought about the management? Have you thought about the projections, the pro formas? So I think understanding, in that first conversation, kind of level setting where we're coming from. Some folks, you're really impressed out of the gate with the homework they've done. Maybe they're already working with a Connor and a Sage. Maybe they've already worked with you, Nick, and no, I know what the zoning looks like. I know where this is. I know how, I kind of know what my pipeline looks like. And some folks were their very first call and they say, I've got a passion for this. Help point me in the right direction. So you get a pretty mixed bag in this space. I think, we try to, out of the gate, establish early, is there a path here? The worst thing we can do is string somebody along for weeks, months, if there's never a path to financing, at least in the way they're thinking about it. If they don't have the 10% of the budget, we've got to figure that out, right? You've got to solve for that, whether that means you go find an investor, maybe you sell an asset, you think about a way, but people will come to us wanting to do a $5 million project and they've got $100,000 to put into it, and that's just not going to work, right? We have to figure out and solve for that. But I think once we start getting aligned on some of those dials, we really want to understand the individual, right? What is their competency? We use a term around the bank that is kind of cheesy, but I think it's true. Do they have the eye of the tiger? And that doesn't mean that they've owned a glamping unit or a glamping accommodation. It doesn't mean that they've spent 10 years in the industry, but, are they savvy? Can they solve problems? Are they going to dig into this thing if things go south, right? Do they have the ability to maneuver, to figure things out? Because when we lend to folks, especially on the SBA side, on the conventional side too, but especially on the SBA side, like you're signing that personal guarantee, you're kind of putting everything on the line. We're not lending, from one institution, one business to another business, right? We want to make sure we're setting that individual up to be successful, because the implications of getting it wrong are pretty high, right? You've invested all your time, all your energy, all your effort, your reputation into this thing. We want to make sure that we are aligned in the path for this thing to be successful. These asset classes ramp up a little bit slower than some others, right? So are we prepared for that? Do we know what that looks like? Um, so building out the budget together, I think going through the cash flow together. The main driver for us, people always ask, what's the decision criteria? The main thing we're always going to look at is cash flow coverage, debt service coverage, which essentially says, after you've paid the expenses of the business, what level of cash flow do you have to service your debt load? And understanding how we solve for that, some asset classes, some of these parks ramp up really quickly, right? They just nail it with the market. They have really good marketing out of the gate. Some, it's going to take you 3 years to stabilize, and are you prepared for that? And do you know what that looks like? So I think very much an educational standpoint is kind of where we come from. We want to learn from them. No one knows their project as well as they do. No one cares about their project as much as they do, but I think hearing the other side, a lot of folks think about it almost romantically, right? Where, we kind of let the math lead and make sure that we're setting you up to be successful there, right? You have to have that passion. You have to have the vision. You have to know how you're going to differentiate, but you also have to know that, at the end of the day, you can afford this comfortably, maintain your lifestyle, and kind of create that vision.
Hi everyone, Nick from Glampitect North America here, and I've just got a very quick message to announce some extremely exciting news. Since launching in July 2022, Glampitect North America has made a name for itself in the North American glamping industry. We've consulted on over 40 glamping projects, accumulated over 47,000 podcast downloads and plays, and we're now ready to take the next step. And with that, we're absolutely delighted to announce that we're beginning the process of developing our own glamping projects. We want you to be involved. There are more details to come, but for now, we're taking expressions of interest from prospective investors. We're so excited to get this going. It's been a long time coming and we can't wait to get you involved. So all you have to do is fill out the form in the description of this episode and we'll be in touch with more information very soon. We can't wait to hear from you and we'll speak to you soon. Bye-bye.
I think you've kind of dove into this a little bit, but maybe diving into that question of like, what does the eye of the tiger mean a little bit more? You mentioned the cash flow and how that can service the debt, but I guess when you're looking at candidates, like what other criteria are they judged on, or what are like red flags and green flags when you're kind of considering an opportunity and a person who's applying for a loan through you guys?
I mean, in terms of a green flag, it's a lot of your kind of what seems basic but isn't always obvious to people, right? Are you a saver? And it doesn't mean that you've got $1 million on your balance sheet, but relative to what you've been making, right? If you make $500,000 a year, but you have $10,000 saved, right? That's a red flag, right? You don't probably handle that the way we would like to see it. What's your credit score look like? And it's not to say, hey, look, if you're 700, let's do the loan, and if you're less, that's not. But digging into the story, trying to make it make sense. So, I mean, some of the more basics, and then I always say it's like as much art as it is science in this space, trying to connect with the individual, trying to understand what is their background. Some folks have operated a factory for 20 years, right? But they've done a lot of homework on this, and they've got really good people skills, and they ask really good questions, and they've done a ton of due diligence. We've been to 10 glamping sites. Here's what we liked about this one. Here's what we didn't like about this one. And you have some folks who say, well, my friend opened one, and I'm kind of tired of building apartments, so I think I'll try this. Like, that is not a very compelling answer to me, right? You have to have that vision, how you're going to differentiate. Management is huge for us, right? So if you're going to self-manage, what skills do you have there? And if you're not going to self-manage, what is the plan there? Do you have your third-party operator? Have you talked with them? Do you know what that looks like? Have you modeled that in? I think a big part for us is homework. You can pretty quickly tell who's done their homework, who has spent time educating themselves to ask good questions, to be more prepared.
Diving into like the third-party management, if someone, and we've talked about this a lot, Nick, where, almost no one has experience in the glamping industry, right? So when people come to us with the project, chances are they don't have any past experience because the industry is only 5 to 10 years old. And so we're talking a little bit about like third-party management, or if they don't have like the direct hotel management experience, them bringing in a third-party management. Could you maybe explain that a little bit, or other ways they could maybe bolster their company or their team with experience, or how you guys would look at that?
Yeah, I mean, it's a bit of a judgment call, right? Because if you're opening 10 units and you've been in management and you seem really sharp, we're probably gonna, and you're gonna say, hey, that's my gig. That's I'm transitioning. This is what I'm going to do. This is my business. I probably trust that you can run 10 units, right? That you can figure that out. If you start talking about, and we're going to have a restaurant, and we're going to have 20 units, and we're going to have a spa, and we're going to have these amenities, right? The more the situation and operation gets complicated, probably the more we're going to say, we really need to understand, if it's not you, right? If we say, ultimately, I think this is a bigger operation, who that third party is, how you operate with them. We've got really good relationships with folks in the space because we think that's really our key risk, right? If we get the numbers right, if we get the appraisal right, now it's getting people to your park and giving them a really good experience. So much so that they want to tell people about it, right? That they want to come back, that they want to tell their friends, that they're compelled to leave a review that says, hey, these guys just nailed it, right? Their vision's great, their location's special. Something went wrong in the night, and boy, they were there to fix it immediately. Just having that kind of ability to build the traction that way. Yeah, I think, as you guys know, it's a very communal industry. People talk, people want to go where their friends have been and had a good experience. So if you have someone who's not prepared to handle all the nuances of hospitality, right, you have to win that business every day. This is not self-storage, right? You don't get it leased up and they come and see it once a year. You have a net new customer expecting an experience, especially in glamping, right? People are really wanting to be catered to, wanting to be taken care of. Like, the higher you climb in terms of your accommodations, in terms of, the spa and all the things you're trying to provide, right? You're getting a higher end client who has a higher expectation. That's good, but you have to be able to deliver on that. So I would say, we feel comfortable with operators probably in that 10 to 15 units if, they seem to have the skill. As you start getting larger than that and you don't have the experience behind you in this industry or in hotel or hospitality directly, that's where we probably start thinking about, okay, for us to get comfortable with this opportunity, we're going to need a third-party management in there who we know has the wherewithal to handle that type of operation. And it's not to say that means you're hands off, right? I mean, you've got to manage the management. It's still your business. It's still your name on the debt. It's not to say, hey, this is no longer your project, right? It's completely your project. This is just a new element to it. So I'd say that's kind of how we think about it. It's a bit of a judgment call, but that's probably that 10 to 15 units. If that's your full-time gig, we're probably good on that. As you start going higher and you don't have direct experience, that's when we probably start thinking about, for us to get comfortable, at least out of the gate, we're going to need to see third-party management.
And you mentioned that you have great relationships with people in the industry, and one such example of that is your relationship with Sage, Connor's company. They obviously, our listeners know full well now that they do feasibility studies. And Connor, I want to ask you, you work hand in hand with Nick and Live Oak quite a lot on a fair few projects. So I just want to hear a bit more about how your feasibility study process works with Nick's SBA or conventional loan process, and how you guys work together and ultimately deliver funding for your clients.
I'll jump in first.
Nick might be able to answer that a little bit better.
I usually call Connor and say, I need a feasibility study in 3 weeks. What can you do? That's usually how the conversation.
I've never heard him give those kind of terms. 3 weeks. He usually tells me 8 weeks.
Yeah. So that's usually.
Why do you think I'm going on vacation for 2 weeks?
Hey Connor, I need that feasibility study yesterday. What can you do? That's usually how the conversation starts.
It's and maybe Nick can expand on this, but essentially we're the independent third party. So if an entrepreneur finds a piece of land and they want to launch a glamping business on that project, and then they do some business projections and write up a business plan and then go to the bank, let's say they go to Nick, and it's their first time doing a project like this. They go to Nick and they start the loan application. Nick's probably going to look at that application and say, okay, it's their first time doing this, and on top of that entrepreneur also has a vested interest in the financial projections that they're putting into it, because obviously they want to get the loan, and it's self-serving. And what Sage does is we act as an independent third party that is neutral, and we've looked at over 200 similar projects across the U.S., so we kind of have knowledge about what typical construction numbers or rates and occupancy and stabilization and operating expenses. So we're kind of the check, if you will, So then we don't even like look at the financial projections of the client, and we go in and we do our own analysis of the market and that business proposal on that piece of land that that entrepreneur wants to buy. And then we send that to the entrepreneur, and then they can send it to Nick. And basically, it's kind of a second set of eyes from a neutral party who has a lot of experience, and then Nick can kind of take a look at that and compare the two projections and get two different sets of information. It's just a lot better than one.
And Nick, how important is third-party validation to those business plans and projections when looking to close a loan?
I think it's critical. I mean, on any startup project, we are not funding a deal without a feasibility study in file, right? Because to Connor's point, you fall in love with your project, you say, oh, we're going to get $300 a night, and we're going to be 90% occupied in 3 months, and we're going to operate at a 70% net operating margin. And you need someone other than the bank, right, that independent, to come in and say, well, here's what folks with accommodations like yours and markets like yours are doing. Here's what reality looks like. It doesn't mean this is the gospel, but it is that check to say, here is a more realistic expectation. Can you exceed it? Sure. Could you do worse? Sure, right? But here is probably the baseline, the kind of median of what this is going to look like in reality. I think one of the biggest things that I've found is they often end up in a similar place, right? I think the borrowers are usually not as realistic as they should be about how long these things take to ramp up. Usually by year 2, year 3, you'll find the feasibility study starts to look pretty close to the borrowers, right? But that's the part that I think they don't fully appreciate, is just when you're starting something brand new, net new out of the ground, it just takes time to get traction, to get the eyes, to get the attention, to get the reputation and right. And if you get it right and the ball gets rolling, great, but it may take longer than you're anticipating. So we use Connor and his team on anything that's net new, so ground up construction, which is probably about 50% of the deals we do. And then also in this space, you'll find a lot of, people use the term mom and pop, but existing operations that have been underperforming, right? They just either have not been continuing to invest in the business. They've kind of let things get away from them in terms of, hey, look, we never got around to making that website. We take reservations over the phone, and that's what it looks like. And whether it's July or whether it's January, it's $100 a night. So folks who just never really modernize their business, if the financial performance doesn't support the vision of what the next guy's doing, sometimes we'll need Connor and his team to come in and say, okay, show us what this thing can do, because it's underperforming now. We know that. They know that. The borrower knows this. The bank knows this. But we need some sense of reality of what it could be. So a lot of folks think about feasibility on only net new, but we also really appreciate and put a lot of support and thought behind the data when it's a turnaround opportunity. Because a lot of times what they're saying is, hey, there's 5 units, there's 10 units, there's 50 RV spots. Not only are we going to bring this thing into the 21st century, but we're also going to expand. So we're taking something that is what it is today and making it really fundamentally different.
And Nick, you've been in the industry for a good while now. You've seen a ton of business plans. I'm sure you've seen some amazing business plans. I'm sure you've seen some absolutely awful business plans. If you were to wake up tomorrow and decide, okay, I'm going to start a glamping resort or an outdoor hospitality resort of your own, what would your kind of plan be? What would you be? Who would you be aiming towards? What kind of units would you be looking at? And I'm sure it depends on the location and everything like that. But would you have a general plan for what you would like to see in your own outdoor hospitality project?
Yeah, I think people are drawn to a couple things, right? People are drawn to water. So if you can find water, put a premium on that. It doesn't have to be the ocean. It can be a lake. It can be a pond. It can be a stream. But people are drawn to water, so I'd prioritize that if I could. You pay for that. Of course, people know, but national parks or some type of attraction there. People go to a lot of these sites to get away, to be more in nature. So if you have good access to that, that's great, I think. And what's the drivability and the flyability? Understanding kind of what markets are you close to. I think we think about from the RV side, obviously driving. Glamping, certainly you have to understand the driving, but if you have I've gone glamping a couple times and I've flown every time, right? So I mean, you have to think about that as well. Um, I think that like if I was going to own it, operate it, manage it myself, I think that 15 to 20 units is a nice place. Certainly depends on the market, depends on what those units are. I like a unit that can withstand all seasons, right? Gives you a little bit, again, all this is kind of dependent on market. Gives you a little more optionality there in terms of when you can use it, what you can charge. People value bathrooms, so I would try to have a bathroom in my unit if I could. We get a lot of feedback there, and I think people in the industry hear that. So maybe that's something I would look for. I was out at the glamping show, and it was Jackie with the Wilding Collective. Her units really jumped out to me. They were the kind of the mirrored units. I thought those were really pretty. It almost felt more like a hotel room inside of it. I was kind of drawn to that instead of a tiny home, because people aren't really going there to live, so to speak. They're going there to stay. So that kind of resonated with me. But I think one day I'll own one or own part of one. So those are some of the things that jumped out to me. But yeah, you spend enough time in the industry and you see what these things can be, and I think they're an incredible opportunity. And you don't find a lot of businesses that can net 40-50%, on top of a covered land play. I think it's special.
Hey Nick, what do you see for more of like a bootstrapping entrepreneur as the most common route? Like if you were laying out a blueprint, or what you see as like the most successful, or maybe if you were doing it yourself, assuming you didn't have $1 million sitting around, and like some rough numbers, like if I'm just trying to kind of put a little bit of a roadmap in place for people to get an idea of what this like might look like. And you were talking about it a bit earlier, but if someone wanted to go out and purchase a property, like let's say they have $100,000, we chatted about the SBA will lend up to 90%. So that means if you do get approved for an SBA lending process, then you could have a total project budget of around $1 million. And so you would need $100,000 to do that. Oftentimes projects and land will cost more than $1 million. I chat with a lot of people about the best route to fundraising in this industry, and the reality is there's not a lot of private investors that are willing to that are going to invest in people's first time launching a business. They're much more open if it's like you've run one successfully and you want to open a second and a third, but if it's your first time launching this type of concept, it's going to be difficult to get private investment. So usually what I am encouraging people to do is either, if you have $100,000 or a couple $100,000 and then can get, the other 90% finance like through the SBA, that's a really common and probably one of the more successful paths that I see. Or you kind of need to get lucky with like an angel investor, probably like one or two high net worth individuals who are willing to put in, some part of that equity, and then you can go and get the rest of it financed through the SBA. And the other route that I see that maybe you could shine some light on, Nick, is if people, let's say they buy the land and they build 2 or 3 units to get kind of a proof of concept and then come back to you guys. I was wondering if you could just maybe like dive into what you see as the most successful route, or for a bootstrapping an entrepreneur who maybe doesn't have more than $100,000 sitting in the bank at home.
Yeah, I mean, Live Oak says they are, one of our kind of mantras, right, is we're dedicated to the doers. So I am always going to fight harder for someone who has 3 units, but they're crushing it, and, they're creating an incredible experience. You've shown me you can do it. You've shown me you've got the will, the grit to go do it. Even if you had to start with 2 units, right? But I'm showing you I can do it. I'm showing you I can produce results. I'm showing you people are resonating with the product and the experience I'm giving them. So to the bootstrapping thing, right, if you can't, it's starting any business, right? Raising money and finding investors is difficult in this space and any space. That's a high bar to clear. I think certainly start with folks in the industry, right? Call around to, there's a glamping project you found that you admire, right? You admire what they've built, you admire the way they do it, create a relationship there. Maybe they have an investor, right? I think I have found this industry to be very willing to share, very willing to help. I don't feel like it's ultra competitive, right? my successful glamping opportunity in Austin, Texas is never going to take away from the successful glamping opportunity you're trying to build in North Carolina. So what can we share, right? What if we could send each other business? It's not this competitive. I'm never going to introduce you to them because that takes away from me. I don't feel that in this industry. So I think talk to folks who have done it, talk to folks who are doing it, or do what you can with what you can, right? Start with 1 unit, start with 2 units. We've got a guy right now outside of Atlanta who really kind of bootstrapped it himself then, and he's kind of added 1 at a time. Now he's got 10 units. They are crushing it. He's got this beautiful property. He's got this vision that it took him 10 years to get here, but now he's coming to us he's going to double the size of the project, right? He's going to take his 10 and turn it into 20 or 25. And I feel really confident in him, because he's shown us he can do it. He didn't sit around waiting until he was ready to get a big loan to do 25 at one time. He just started. Built a business, built his business slowly, continued to reinvest in the business, and now he's kind of ready to take a big swing at it, and we're really excited.
Amazing. And as I say, most weeks we have a real wide mix of people listening to this podcast. We've got some with millions in the bank. We've got a lot with nowhere near that in the bank. And I'm glad that we've got an opportunity to help, everyone in between and in either end of the spectrum. So that's really great. I know for a fact, I would bet my house on the fact that you're going to get a lot of inquiries off the back of this podcast, which is great. This kind of in return for you giving up your time. So if anyone does want to reach out and get in touch about financing their glamping project, campsite, RV park, whatever it is, how do they go about doing that?
Yeah, probably the easiest way is just email. So it's just nick.parker@liveoak.bank. And yeah, we're happy to, you don't have to have a project on the line. I think we kind of pride ourselves in being advocates for the industry, advocates for entrepreneurs. So if you're just trying to say, look, I just need to understand how we piece this thing together, we've got time for you, right? We don't need you to say, hey, look, I've got this $4 million project under contract for us to get interested. We are in this thing for the long term. We want to cultivate goodwill. We want to show people we're committed to the industry. We want to help entrepreneurs. So yeah, we're willing to take any call, help anybody. So
amazing. Well, hopefully this helps people get started. I'm sure you're going to get plenty of inquiries. So Nick, thank you again for coming on. Lots of wisdom from that one. And Connor, again, thank you for coming back as a co-host. That's your 2nd episode now. And yeah, we'll be catching up again soon.
Okay, thanks guys.